Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, August 11th, 2021, and I'm really pumped up this morning. I'm really excited. I've had about 5 cups of these today already, and we have such a great panel today. First of all, our special guest today is Noel Heideman from Broock Realty. Hey, Noel, what's happening?
Hey, guys. How you doing? Great to be here. Good to see
Noel
you guys
Heideman's
again.
He's a longtime friend. He's a truly a veteran in our real estate market and local area here. Also with us, we have Miss Lisa Lawson.
Morning, everybody.
Lisa Lawson is the Google of the office and the credit queen, we like to call her. So, Lisa, good morning, and it's always great to see you. And we have Mr. John Kolb, top 1% of all originators in these United States of America. Good morning, John Kolb.
Good morning, guys. How's it going today?
It's going wonderful. And I got to start out with Noel. Noel, I got to tell you something. It doesn't seem like the market has slowed down. It does seem like there are certain offers, maybe not the multiple offers that we've been seeing. Prices are still increasing. Appreciation right now is still double digits. Give us a little bit of an overview of what's going on in your market area and what you're feeling and most importantly, what you're seeing in the market.
You know, I think it's a combination. I think that you're right that there are still multiple offer situations, primarily in I think the range of about 650 or lower. That market still seems to be pretty high. But, you know, a lot of sellers, it's funny. I've seen some buyers transition out of the market because they're just tired of losing 2, 3, 4 houses. And maybe they're in a situation that they didn't necessarily have to buy right away. They're not, they haven't sold their home. They're feeling under the, gun in regard to finding a new place and almost being forced to spend more money than they really want to. I've seen some buyers pull out and just wait for the market to settle down. There does seem to be a little bit more inventory. There are multiple offer situations, but you guys are probably running into the same thing that we are, that, we're getting more and more, it seems like, offers that get accepted. Say there's multiple offers, say there's 3, 4, 5, whatever. And the buyer accepts and almost gets buyer's remorse, and thinks about it, after a period of time, say during the inspection period, and realizes that, gosh, how much did I pay for this house? So they get excited about buying it, and they where the offer that was chosen, and then start to really think about it. And I've seen that quite a bit too. Right now, as you guys know, interest rates are great. We still need more inventory. This COVID situation is flaring up again with school, so everybody's, concentrating on that. I have an 11th grader that I believe masks are going to be required for her when she goes back. And then the same thing, I have a young girl at Michigan State. She's going to be a junior. And, they're requiring masks and stuff too. And they can't even go on campus unless they're vaccinated. So it's kind of, it's a touchy-feely, feeling things out. Market's, been pretty good. Our office is up in volume. So everything is, looking very good and very strong. And we don't see any really decline in that. I think what we see is more of a leveling out. People think, well, that must be that the market's going down. Well, it's really not. It's just been at an elevated pace for, 18 months. So it needs to settle down a little bit.
Yeah, everybody out there, it does bear the conversation that Noel Heideman is in one of the busiest offices in southeastern Michigan. He's out of Broock in Birmingham. They do a lot of high quality, a lot of high balance properties, and they're just always busy. But that's a great segue, Lisa Lawson. Noel does say that, there are people that are selling homes. Where are they going to go? Maybe they're just taking the profit that they're making on their home, and they're going to wait till maybe the market calms down. Maybe the market doesn't calm down, but there is a philosophy out there that they're going to take what they get on their existing home, and then they're going to be on the sideline. Lisa Lawson, what are you feeling?
Yeah, I mean, I have a client right now who originally was trying to find something, decided they didn't want to be part of this rat race. It was too much for them. They had put so many offers, nothing was getting accepted. They decided to continue with the sale of their home, and they're going to rent for a year, and decided they'll wait, 6 months from now and start looking again. Hopefully the market will calm down. There's some people who just aren't in the buy, but they did want to maximize on what they could get for their home. So that was a decision that they made. I've had a few other buyers that just decided everything was a little too crazy for them, and they're gonna, take a step back and wait, see how things settle out, maybe start again in 3 or 6 months. But I think it's smart. This is a kind of a crazy market, even if it is settling down a little bit. You're going to get max that you can if you're doing a sale, and if you have the ability to stay with a family member or you're willing to rent for a short period of time, it's not a terrible idea.
Yeah, and I agree with that, Lisa. And I think that we say it's situational. It just depends on whomever's selling the home, what their particular circumstances, and can they move into an apartment for a while or a rental situation, or do they have to go ahead and buy a house? And somebody that's a first-time home buyer they want to get in right now because rates are so low, they have a different situation. Mr. John Kolb, you're out in the wilderness. Are you up north, John Kolb?
I am. I'm up here all week. We are having some work done on the home, but like I was telling Roberto and Noel, the work hasn't even started because people show up with the wrong materials, wrong parts, or no parts at all. So, hey, it's just part of dealing with what's going on in that crazy world. People just don't pay attention, listen, work as hard as they used to, with the exception of the few that are on this panel, that's for sure.
So, John, I have a question for you. It seems that, and it's been documented right now in Mortgage News Daily and Home, in all the publications, the trade publications, Housing Wire, only 28% of people think it's a good time to buy right now. Really? I mean, why? Why do you think less than 30% of people out there surveyed think it's not a good, they only think it's a good time to buy? So that means let's do the math. 72% of people out there surveyed says it wasn't a good time. Why do you think that is?
I think that's everybody's thinking that it's the height of the market. You're overpaying for prices or for homes, and that everything's going to crash. There's a whole lot of people that think that everything's going to crash, and I don't see that happening like it did in 2008, 9, and 10 because of all the guidance and protocols that we have to go through to be able to get mortgages approved. But at the same point, do I think values are going to come down a little bit, or the prices aren't going to sustain to what they are right now? No, I don't think that's going to sustain. But that doesn't mean it's a bad time to buy. I think it's just people getting scared based upon what's happened in the past and not seeing the future of what it could be.
Well, let me tell you what's really good and what's really smart. I think people are really getting this idea, panel. Noel, Lisa, and John. Only 5% of consumers survey expect further declines in mortgage interest rates. Okay. In other words, rates aren't going down to zero, Noel. Right. And I think it's a great time to buy. Mortgage rates are still historically low. You could still get a 10 and 15-year fixed mortgage in the mid 2% range. Okay. 2.5, 2 5/8. Maybe a little lower, maybe a little higher, but we'll average it out at 2.5, 2 5/8. And the 30-year fix is still in the 3% range. Can you get 2.99? Can you get 2.875? Can you get 3.25? Can you get so those are the ranges. So no, people are finally smartening up. They're knowledgeable now, and they're saying, you know what? We realize there's no more rates going down.
I think parlaying off of what Lisa said, I get questions like this asked to me all the time. Is it a smart time to buy? Is it, should I rent? And I think it's really based on what your current situation is. What you got to do is you got to lay out the pros and cons of everything. So, moving and renting, more than likely you're going to go to a smaller place. So you're going to have storage, you're going to be moving a couple times. But if that works for you, like Lisa said, and, where clients are going to stack away their money and wait for it to maybe, settle down a little bit. If that works for them, that's great. There are deals out there still. There are houses that are overpriced that people have listened to, not only, the news media, but their friends, and they hear their neighbor down the street sold for $8 million and their house was last year worth $200,000. And it's like, oh my gosh, I got to do this. I always tell people this in regard to renting. If you need to rent, then you do it. However, if you can purchase, number one, you get a tax write-off, and interest rates are as low as they are. And let's just say hypothetically, in a year or two, you break even on your house, right? Well, if you're paying $2,000, $3,000, $1,500, whatever it is a month, and if you're in a 2-year lease and you plan on buying after that, or a year lease and buying after that, you get zero back from that rent. Nothing. I mean, even if you broke even on a real estate purchase, you still own the house. You get the tax write-off. You got a lot of bonuses there. Where you walk away from a lease and you get nothing. And you know, that's a year's worth of money you've just spent on something temporary. If it works for you, yes, it's advised. But I still think that there are plenty of houses out there that have been on the market for a long period of time, or for a period of time longer than what has been norm, because they've put their houses on the market for way more than what the real value is, because they see what the other values are going for. You guys run into this all the time. I have the last couple transactions in regard to appraisals. One recently that John just did came back no problem. I've got another one I'm supposed to be closing tomorrow morning, and we did have an issue with appraisal, but we're going back and forth and still trying to get it clear to close. I've had one that actually came in like $15,000-$20,000 less last week. So I mean, we're dealing with it. It's not like the market and the appraisers are just going, yeah, well, that's the sales price. Okay, well, that's the value of the property. There still is a checks and balances in place. And I think a lot of people don't understand that or realize that. They just think, oh, well, if somebody gets $50,000 over, you know, the price that they're asking, then that's the sales price. Well, that's not always true, as we all know, when you're dealing with a mortgage. If it's a cash deal, sure, but not all deals are cash. There's a lot of them out there, more than there used to be, but still people have to get mortgages. So there is a checks and balances system. I think people think that it's the Wild West and prices are going crazy and, you know, there's no stopping it. And I know that, you know, we all know, because we do this every day, and that's our job to educate the public, that there are checks and balances in place. And there's still protocol that has to be, you know, followed in regard to the approval of people and their loans and the value of what the underwriter considers, or not the underwriter, but the appraiser considers, you know, the value of the home.
Yeah, that's a very strong point. And one of my favorite topics to talk about as a discussion point, always property values and appraisals. This podcast is brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, equal housing lender, 2289's NMLS number. That's for clients' compliance purposes. But also, we are a top 5 lender in the country. We have to point that out. And as Noel said, we process, close, fund, underwrite our own transactions. We also service transactions as well. And Lisa Lawson, moving into the appraisal topic, I can tell you this, that appraisers, yes, because there have been such a fervent momentum and sales going on, just because prices are higher doesn't mean properties are going to come in at what the purchase price is going to be, right?
No, absolutely not. You know, that's exactly why properties don't always come in at what the purchase price is going to be. You know, we have these people who are like making these crazy guarantees. I've talked about it before. I had one that had a $41,000 appraisal guarantee. I had one the other day. They wanted a $30,000 appraisal guarantee. When people are putting those guarantees in, that to me, that's a huge sign. I want to say red flag, that that property is most likely not going to appraise for that amount. That's why those guarantees are getting put in. So absolutely. And, you know, the value is the value. Obviously, there's checks and balances, but if a house has no comps and there's nothing that around that has been sold for 30,000 above it, you know, what this is listed for, what makes you think that value is going to come in? So you have to be prepared. Doesn't mean that those don't close. Doesn't mean that people aren't willing to bring those extra funds to closing. That happens too. But, you know, the values we can't get caught up, right? I mean, we're always about a couple months behind. Things get posted. It's got to go in public record, you know, so we're looking at the sales that happened yesterday, last month, and the month before, not in the future. And, you know, we have to be realistic about what these numbers are going to be.
Yeah, I think that's true. Real life example. Yesterday, I was going over an appraisal, and in the same complex, a property sold for $225. Okay, the appraiser brought it in at $219. Now you might say, well, it's a $6,000 difference. Why couldn't the appraiser just bring it in at the purchase price? Well, there is a rebuttal process. There is a reconsideration process that we go through. I did find a comparable in the same complex that sold for the same sales price as ours. I'm going to be submitting that to the panel. And I'm looking to get a reversal of this and getting it bumped up. Now, we can only suggest it. We can't mandate it. We can't even talk to the appraiser about it. But you would think that if a home in the same subdivision, same square foot, sold for 225, and it's right next door to our property, that our property would appraise for 225. But we're going to see what happens on that. John Kolb, I know you have some opinions about how appraisers are. You've been very vocal about it. On our show, 97.1 FM, every week we go with the Hardcore Mortgage Real Estate Business Show. Been doing it for going on 22 years. John Kolb, you're an active participant, advocate, and extremely opinionated on that show, sometimes about appraisers and property values, right?
Well, I am. And, I've said in the past that, I believe that if there's a contract out there, that it should be met at all possible needs and wants. But I've been called out by Mike Tomchek at Paramount Appraisals a couple times for what I've said, stating that they cannot just use the purchase price as the appraised value because there's a contract in place. I forget the terminology he used, but it's a compliance issue with them. They have to make sure they're doing their due diligence. Yes, they have the contract in front of them, but they're to bring it in higher, lower at the value based upon the comps that are out there. No ifs, ands, or buts about it. So, I firmly believe that if there's a contract in place, that it should be upheld as best as they can. But I understand that the appraisers have their checks and balances that they have to go off of in order to get things to appraise. And, like I said, I was put in my place, told I was wrong. I appreciate Mike Tomchek calling me up and saying that and letting me know because I want to make sure that I'm passing on good information.
Yeah, we all have our go-to people. We all have our teams of people that have been in the business, that are experienced in the business and what we do. And it's good to put together a solid team. Mike Tomchek from Paramount Appraisals, he's one of our go-to people. He's been on our show. He's been on our podcast. And he's extremely objective, and he will take and analyze all different sides of a transaction and property value. And I know that when we ask Mike Tomchek for his opinion, he's going to give us his honest, solid, objective opinion. He's very strong. We give him a shout out as many times as we can. So, Mike, if you're listening to the podcast, we have you on the show. You give great advice. We value your opinion, and you're a trusted advisor to our team. No, I know you have people on your team. I know that you have inspectors. I know you have roofers. I know you have contractors that you like to go to. I know that you have mortgage people like the team here and John Kolb that you want. You ask them for advice. You can't get enough good people on your team, right? No, when you're representing somebody and there are questions to be asked, you got to have a team of people to go to get the proper answers, correct?
Yeah, I mean, especially with mortgages and appraisals, if people don't know people, you give them, a few people of, who you'd recommend. You can't pick it for them. It's their decision, but you're there to guide them and to help them along the way. It's interesting talking about what Lisa was talking about. I'd love to talk about this a little bit on Saturday in regard to purchase agreements. And I've gotten some really, really funky ones that I don't even know if the agents are even thinking about what they're writing. They're just writing, an offer that's got 5 scoops of ice cream and whipped cream and cherries and drizzle on top and all these things. And you really look at it and you write it down, about the details. And you're like, this doesn't even make sense. Like how, for example, I had something, a $400,000 deal that the buyer was writing down a minimum of a down payment in regards to a maximum amount of their mortgage. And then they wanted an appraisal guarantee cash of like $30,000. It's a $400,000 house. It's like, that doesn't make sense at all. Like you're only going to put a minimum down, but you're going to appraisal guarantee 40 grand. Like, I don't, maybe they can slip that by people that don't read the purchase agreements. I don't know, but there's a lot of stuff like that. People are going and just ridiculous amounts of what they're guaranteeing to try to get something. And it's kind of like, maybe they are, like we talked about, a little bit, maybe they are just assuming that, well, it's never going to appraise for that. So why not write it in there? Well, if it does, then you run into problems. So you've always got to do, as you guys know, do your due diligence, try to, get all the details you can about the other parties that you're accepting for your client, to make sure you put yourself in the best position possible to get to the end goal, which is to close on the property.
You got that right, Noel. And Noel Heideman, he will be our special guest on this Saturday's Hardcore Mortgage Real Estate Business Show, heard every week at 9 o'clock. We go from 9 to 10 on 97.1 FM, The Ticket. Been doing it for almost 22 years. We're coming up on our anniversary this fall of being on the radio and really giving great consumer advice, objective advice, hardcore answers to your hardcore questions. We might not tell you what you want to hear, but we might tell you what you need to hear. And if you choose to take the advice, I would say that we have a very strong panel. Noel has been part of our show for a number of years now. Lisa Lawson, the kind of advice that we give, people might not like it. I mean, real life examples are, we want to go ahead and we want to do transactions for everybody. But Lisa Lawson, sometimes after working with people for 2, 3, 4 months, they just don't qualify.
Yeah, I mean, those are rough days and I feel terrible. And I had one yesterday where sometimes, you pull credit and you counsel people and you give them advice, but they don't always listen, or sometimes things come up in their life that they can't do the steps that we had outlined for them with certain debts paid down. People are still living, things happen, they have emergencies, they may not be able to come up with the money, and it's frustrating because they want to be homeowners real badly. They want to take advantage of these low rates and some of these first time home buyer programs, but you still have to meet those minimums. As loan officers, the advice that we're giving you is to put you in the best position possible so you can be approved and get into a home. We're not trying to be mean. We're not trying to make anybody feel bad, but we know that this is what it takes. We have to have this kind of minimum credit score. You have to have this kind of money in the bank, but yeah, there's times it just doesn't work out the way we all hope. And, we're always willing to reevaluate and relook at things. And sometimes the borrower just needs some more time, and we'll give them all the time that they need. But it's not always sunshine and roses, this job.
Yeah, Lisa, nobody's more compassionate than you are. Nobody works harder at trying to turn people's credit around. You've been doing this a long time. You are the credit queen in our office. We always go to you and, try to help people get their credit score up 2, 3, 5, 10 points. And, there's only so many rabbits you can pull out of a hat, and it's really data driven, but people have to live up to their end of the bargain. And as a consumer, our end of the bargain is we have to pay our bills on time to go ahead and get your credit score up. There is no magic potion there. If you're paying $500, $1,000 to a credit company, I think you're just throwing your money away. I've said that for years, and I'm on record of saying that for years. The key to getting a better credit score is it's paying your bills on time. John Kolb, I'm going to give you the last word on this segment, and we're going to go to Noel, Lisa, and then I'm going to wrap it up. But, John, people have to pay their bills on time. We just can't. Here, if you're not making your car payment on time and you're not making your department store credit cards on time, how can you possibly afford to make a mortgage payment? I mean, come on, right?
It's quite amazing. I get emails, I get texts, just the random questions, the silly questions that are asked that just seem so common sense out there. But yes, number one thing is making sure you're paying your bills on time. Number two is making sure you're utilizing your credit the right way. There's limits and there's thresholds that you shouldn't cross over those limits so that you keep a good credit score, whether you pay your credit card off every single month in full or you make the minimum payment. There's thresholds you don't want to cross because it'll ding your credit, even if you are making your payments on time, causing your score to go a little bit lower than it should be. And you just got to heed the advice of the professionals. You call me up, you ask me a question, what to do, what not to do. I give you my time, my answers, my advice. And if you don't listen, that's on you. That's not on me. That's not on Noel. That's not on Harry. That's on you. And you know what? Listen to what we're saying. Don't text me on a Sunday telling me that you're out furniture shopping. I don't even have you approved yet. And we had to pay off credit cards to get you the house that you wanted. Don't do that. That makes me upset that I spent as much time on the front end that we do. So listen to what we have to say. We're out there to help you. If you don't think that we're out here to help you, then I don't want your business anyways. So, but we're here to help. We're doing it the right way. We're making sure we're taking care of people like they are family. And, 9.5 times out of 10, everybody is listening, happy, healthy, and doing it the right way.
Yeah, Lisa Lawson, I'm going to go to you, and then I'm going to go to Noel. Lisa, don't you just love edgy John Kolb?
I do love edgy John Kolb. He's my favorite.
Yeah, there you go.
Yeah. You know, to piggyback off what he's saying is credit. And we already know that I love credit. I love helping people with credit. But, there's that saying that people have to help themselves as well. So when you get this advice, like John said, nothing kind of frustrates me more is when I tell somebody who really has no positive credit history, right? They might have 9 trade lines, but there's lates on all of them. 7 of them have turned into collections. You know what I mean? And they think they're going to buy a house, but they were late on a car payment 3 months ago. And I tell them this is what we need to do. We have to reestablish new positive credit history. We have to offset some of this negative history. And they call you back, a month later and say, oh, I got a pre-approval from XYZ shop because I met that minimum credit score requirement. There's more to it than just a score, and then it gets very frustrating because sure enough, 3-4 months after that, I get another call saying, well, they couldn't close me, and they come back. We only give this information and this advice is because we've been there. We all have years and years of experience. We know what other people say on the phone to get your business, and we know what's actually doable and closable. And we give this information freely to everybody because we want them to be in the best position possible so they have an easy process when they're trying to close, that there are no surprises at the end, that they're all of a sudden they think they're buying a house and they can't, and they've wasted money on inspections and appraisals. So, whether you got a perfect credit score now or you want something a little bit tweaked, we're happy to help, but please understand that we're just doing this for your benefit.
I love that, Lisa. And I know that you mean it, and everybody out there that knows you knows that you mean it true. It is true. Noel Heideman, you've been around the block a few times. I can't believe that you wouldn't put anybody in their best position to succeed. I know you too well. I know you do it. I know you care about your clients. And most of all, you just want to make people happy and get them into the right home for them. Give us your last words for the program today, August 11, 2021.
Yeah, looking forward to Saturday, and I couldn't agree with John and Lisa more. It's why, I've had a relationship with John for, 25 years, if not longer than that, and Capital Mortgage Funding. You guys do it right. Life is not easy, and sometimes you got to hear things that you don't want to hear. But you guys have consistently, in the 25 plus years that I've worked with Capital Mortgage Funding, put people in the right places and gotten them approved and gotten them the best rates they can get for their personal situation. And just because somebody qualifies for, 2.5% or whatever it is, people hear that and think that qualifies for them, but they didn't see that they, on the back end, they had to put $2,000 down to drop the rate, whatever. It's a lot more complicated than that. And listen, there's nothing to be embarrassed about or frustrated. You just got to listen to what, John and Lisa and Harry, saying regarding getting approved, and it'll happen.
Well, it's important to listen to people that are on your team that want to do right for you, but they want to do it for the right reasons. And the right reasons are just trying to be positive, setting people up for success, and just giving you the proper advice. Okay. And we say it every week, but it's like blocking and tackling. You know what? If you're not prepared, if you're not doing the same things every day, if you're not trying to help people out, it's just the reason why we wake up every morning. That's right. I mean, it's just that simple for us. But anyways, Noel, looking forward to having you on the program. 97.1 FM, Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender, 2289 NMLS for all our compliance people. For Roberto Beauchene in the booth, he's our producer and our director. This has been the Hardcore Mortgage Podcast. Want to thank Lisa Lawson, John Kolb, Noel Heideman, Max Broock Realty in Birmingham. We love you guys. We'll see you soon. And that's it for today, guys. Bye, everybody.